report. It is Monday the 22nd. Let's kick things off with a little audio-visual check. We get the risk disclaimer going. Hope everyone had a great weekend. Let's go. Before we dive into the charts, let's begin with a risk disclaimer. We understand is risk in trading. Please and always use trade capital only. Do not trade with money you cannot afford to lose. Whether you're trading stocks, options, futures, forex, cryptos, you know the risks. If you're following me out there on social media, make sure you're following the real me. Facebook, Instagram, Twitter, TikTok, real Chris Pulver. I will not direct message you without your message coming to me first. So I will reply, but do not ever think that it's me that is replying or soliciting and talking about crazy stuff. That's scamming. Just get those clowns off the social media platforms by reporting them, flagging them, and don't engage with them. And then Mondays and Fridays live with me for some market outlooks and recaps. YouTube.com/Chris Pulver. All right, everything coming through loud and clear. Happy Monday, everybody. Let me get signed in. Say hi to everybody, and we'll kick things off. I've got the Forex Factory calendar up right here. Take a look at what's pressing for the week. And we'll shouldn't be a super busy. Forex Factory calendar up right here. Take a look. Shouldn't be a super busy week as far as stocks and options. We're kind of winding down on earnings a little bit. We had some PMI numbers coming out of the Eurozone, which would be important to watch. Eurozone seems to be in trouble. Although they did dodge the 2 quarters contracting GDP data point. Even though the U.S. did hit it, I would say that if you surveyed anybody randomly right now, they would tell you that the Eurozone is probably in worse position than the U.S. But according to their GDP numbers, it doesn't show that. They're not contracting. Anyway, PMI numbers coming out of France, Germany, Eurozone. A lot of medium impact news this week. Prelim GDP for the U.S. on Thursday. And Jackson Hole. Always a big. This is why August is typically a big transition month. Is Jackson Hole is usually always in August. That is your, that's kind of similar to your economic summit in Davos. That's your G7s. Lots of power players, right? Central bankers, finance ministers, market participants, the world coming to the old J-hole, Jackson Hole. That starts on Thursday and should be running all weekend. So we might see some quiet movement until Jackson Hole. We might see a lot of movement before Jackson Hole. This is the last full trading week of the month of August. We'll go through the 26th. We'll wrap up next Wednesday, and we'll kick off September with summer's officially done, non-farm payroll. What's the Fed going to do? Right, September 21st is the CME Fed Watch tool right here. And is it changing once again? So here we go again, this old song and dance. So now the market is looking at a 75 basis points hike in September. I think we've seen this three or four times completely switch from this was the winner. No, this is the winner. No, this is the winner. No, this is the winner. And now we're back here. So this is probably the 5th time we've seen it change, but you notice it is getting closer and closer to 50%. So essentially all this is showing us is that it's a bit of a coin flip. Nobody really knows what the Fed's going to come out with officially, outside of, I think it's safe to say, they're not going to surprise the market with a 1% hike, and they're probably not going to surprise the market with a 25 basis points hike. So 50 to 75 is pretty safe and secure. How the market reacts to that, we'll find out. We still have, like I said, a week and a half of trading. Pre-market today, things look pretty nasty. So we had a 422 close last week on the SPY, and we're trading pre-market at 417. The interesting piece is this gap. We were expecting to have a bit of a fill. You can see resistance, you can see resistance, you can see resistance, and it did play out. And so it wasn't a perfect setup for last week's Friday's expiration, but that gap getting filled, and this is what I keep talking about. Is this whole run, was this the bear market rally, where the Nasdaq's 20% off the lows and the SPY's 18.5% off the lows? Is this just going to return to the lows again? I don't know. I don't think so. And again, thinking versus seeing are two different things. I could see the market coming back to pull back, right? We have a nice little rally here. We'll see if the market's going to be contained somewhat in between the 200 and the 50 EMA. If we break back below, I would say that if we're back below, and I hate looking at like lagging confirmation for the SPY, But the reality is this. There's momentum behind all these moves, right? So if the SPY breaks these highs, expect that to be the path of least resistance. If the SPY breaks this low around 403 or the round number at 400, I know you're going to give away some potential positioning, but what you give away in positioning, you will have in probability and confirmation that you're going to follow the next move. So I think if we break below 400, there's more downside pressure to take some stabs at the market. I'm still not super bearish. I'm still looking to see what we can position ourselves in to buy dips. But if we break the new highs, obviously I'm following those runs. Target the high, target the high. Let's see what this market can do. This could be very similar to this decline was what we had in late 2018, and a potential rally is what we had pretty much all of 2019. And we did. I mean, all of 2019 was a bull market. 2020 going into January was a bull market, right where we left off. And then February, March, we had our COVID crash in 2020. So was it all because of COVID? Well, that's what the market made you think. But the technicals lined up for a sell-off in 2020 anyway. It just happened to be a super nasty, aggressive, 4-week sell-off versus what typically takes months and months and months to play out. Okay, so that's where we're at. That's what I'm looking for this week. We're off to a kind of shaky start with a big gap to the downside. Looking at around, let's see, let's do a little percentage move there. So if we're at 422 with that close to a pre-market, we're probably looking at a 1% gap lower, maybe slightly more. So again, it'll be interesting to see, does the market gap lower? Okay, does it gap lower and fill and maybe retrace a little bit, right? But then that gives us another gap for the bulls to come after. So August, Jackson Hole this week, we could have the bulls and bears kind of fighting around, and we'll see some consolidation and some liquidity levels getting filled. All right, currency strength chart this morning. Volatility somewhat contained. We have the Aussie New Zealand leading the way. Everything else is kind of baseline. The euro's a little bit softer. JPY off the lows, coming back into the middle somewhere. Still have some really nice bar counts. And again, we're not going to see anything really from the Fed until September 21st. But what is the dollar doing? Let's take a look at the dollar index and the dollar charts, and also with oil and energy. So dollar index, we had 5 or 6 days in a row last week, or the last couple of weeks. So 1, 2, 3, 4, 5, 6 days in a row. We're at 13,067. I'm still looking for a dollar weakness correction based on a bar count. Traders know this in my flex room. Is this a high to low? And then I thought we'd have a little bit of a flat pattern in here, and then another sell-off, but it did push a little bit higher. I'm not saying it's invalidated. Okay, we're not taking out the high yet. If somehow this continues to creep up to these highs, I'm looking for divergence and then a topping pattern in the dollar for a correction. So I am looking for near-term weakness in the dollar. I don't know what the catalyst is going to be. I don't really care. Maybe it's non-farm payroll. Maybe it's something with the Fed pre-September 21st. But according to the charts and the bar counts that I see, euro dollar, dollar yen, dollar index, DXY, all those bar counts have a lot of solid technical setups. All right. So that's US dollar, DXY. Same thing here. Big run to the upside. We're nearly back up to the highs on the DXY. We bounced off this 50. We have a pretty high bar count. I think the DXY is the lesser of the two. This one has like a 240, 250 bar count. Let me stretch this over here. So this one from, looks like September of 2021 to present, we're sitting around 250 bars, and the US dollar should be exceeding that. US dollar index goes back to June, of 2021. And that last touch, we are at 300 plus bars. Wow. So 250 and 300 plus bars, and the dollar yen, we might even be crossing 400 bars on the dollar yen at this point. I've got to compress these charts to find this dollar yen right here. So there's last time we hit, current bar count 387. Okay, creeping up there, 13 days. That's going to get us just in that first part of September before we hit 400 bars. That's a lot, ladies and gentlemen. On a daily count, that's a lot from the 200 EMA. So again, watching everything pretty carefully. Had some good news last week in stocks and options. Let me bring up the notepad. I had a couple of stocks called away, and that was a good thing. So ended up with the close last week. Had some profit on Alcoa was called away. Let me just go ahead and type it in here. So Alcoa got called away for about $10 a share. We closed at 51.01, and I had a covered call at 51 on the nose. So worked out pretty well. I got the stock called away. My break even was around $41, so about $10 a share. Pretty happy with that overall. I have a bunch of credit spreads that are staggered out through the rest of the year. Also, Coca-Cola was called away for profit at 65. We closed at 65.17. I've got credit spreads in this one as well. That will be staggered out. We'll look to buy more. Also, we'll probably look to participate in KDP. We had some profit on this one with a credit spread all the way up to 39. Our legs were down here to 36 and 35, so it wasn't even close. Ones that we'll be replacing, Pulte Homes, we're trading at 42.31. I'll put another $45 call on this. What else was called away last week? Corn got called away. Traders in the equities on demand room, we put in a 25, I think is the covered call. Put in a $25 call for last Friday. We had like a 2-day expiration on it and ended up getting called away for about 30 cents a share, which I'm totally fine with because we still have staggered credit spreads out for the rest of the year. Sticking with the theme of there's going to be some commodity pricing, right? It may be materials, it might be steel, it might be copper, it might be aluminum, it might be raw materials, agriculture stuff, corn, wheat. So we have some exposure on some of those commodity-based ETFs, copper, zinc, aluminum, oil, platinum, gold, silver. Some of those plays have been pretty favorable. That was a great Q1 for us because of that, and we'll see if that's going to continue to play out. All right. So all things good. Pretty quiet on the expiration front this week for equities on demand, which is totally fine. Let's get into Forex. Somebody messaged me last week. Can we do more Forex? Sure, we do Forex every week. So if you have requests, obviously type it in the chat, and I'll look through the charts, but I just like to take a quick peek. Aussie CAD, I'm long. I think I did this on Friday last week as well. I just said, hey, these are all the currencies. This is my direction. Aussie CAD, I'm long. Aussie Swiss, I am long, holding a small position, looking to get back some pockets towards 7,000. I realize that Aussie Swiss, in order for me to get profitable on this one, it might be high to low, a little bit of a correction coming in here first. We might push down again, trying to buy this thing nice and low. Now, if it happens to work its way back up with a risk-on rally, that's fine. I'll see some profits around 7,000. But I'm going to hold and maintain some Aussie Swiss longs. Aussie yen, I'm long with a hedge. If we have the JPY get a little bit softer, I could see this Aussie yen creeping up into profit here. 98, 99, possibly parity at 1.00 to take some profit. So I'm long as I am hedged with the Aussie yen. I'm long Aussie yen, I'm short Swiss yen, I'm short dollar yen, and I'm going to see if I can get this one to pay out. If this drops, then these pay out, and I will just work a position or two through the Aussie yen and get a bounce and work it to break even or better for some profit. But I'm maintaining a small kind of hedge long position. I keep telling traders if you're not positioned on JPY crosses, then follow the short-term alignments. There's a lot of choppiness going on right now. Look for some clean breakouts and bull and bear flags, and just follow your alignments. That's the best way to trade them. Aussie New Zealand, we're at 1145. Did we get filled? Did we get filled at 111.50? High today at 49.7. Depends on your broker feed, but let me check my phone really quickly. Did I get filled at 111.50? I had a pending sell on the Aussie New Zealand. Let's see if this is in. Trades. And not yet filled. So we'll see if that gets tagged this morning at the top. And if it does, it's fine. I'm just going to keep the position right up here for a short. Comes back down to the lows, take some profit around 1.10, or obviously lower. We do have a decent bar count on this one as well that's creeping up towards 200 bars. Okay, yours filled, Gary? Okay, good. I mean, I like the position. I definitely want to get filled on mine. I just looked at my broker platform, though. And when I noticed the high is 49.7, I didn't get filled. Okay, so again, I'm 0.3 of a pip off, I suppose. But with this high back here around 62 or the high around 70, I think we can get filled at 111.50. All right. Aussie dollar, we're going to see if we can get a pending buy filled at 6,700. I'm just going to buy this one and hang on to it low. CAD Swiss, we have a high, low, lower, high, lower, low. There's a ton of support in this one that I will buy, leveled in probably every 100 pips or so. 73.50, 72.50, I cancel that trade, but 73.50, 71.50, I am buying the CAD Swiss. And there is a really nice pocket right up here and a previous high around 7,800. So also, if this is a bit of consolidation and we can have this area act as support, if we can get this to stay above, let's say stay above 7,450 or get back above 7,500, then I think we head up towards 7,750 and those long positions look pretty good. So I'm going to keep that CAD Swiss long. CAD Yen following alignments. This one might come up and breach those highs just for a little bit, but watch for divergence. Okay, this low, if we come up one more time with a high, I think this high sets up for some type of structure to break down like a rising wedge. And then from there, I'm looking for that type of rebalancing. So if you're following alignments, path of the least resistance right now is a choppy but steady bullish move. Just be careful. Have some stop losses in place. It could be a little bit messy, or just kind of wait this out, wait the structure out, and see how it plays out. If we make a new high, rather than selling that high, like look at a stop sell. Let price come back to you. Let price break this rising wedge and then show that it's going to drop. Because when it does, it'll drop fast. Swiss yen, I am also short on this one. Oops, I typed it in wrong. Swiss yen, I'm short. We're back up towards these highs with some consolidation. I'm looking to see if this area, there is a low. If we go up slightly higher, I'm looking for this to come back down and form a head and shoulders or a topping pattern to come all the way back down to 128. We are at historical highs on the Swiss yen. So not that matters. They've been broken before. We broke the highs back in 2008. We broke the highs in 2015. We're breaking the highs in 2022. So doesn't mean we can't keep going higher. But again, bar count wise, technical wise, there's a pretty solid bar count on this one as well. This goes back to 230 bars, 240 bars almost. So we're creeping up on some decent extremes with some of these JPY crosses. Euro Aussie is pretty choppy. I would leave this one alone. Euro CAD, we're looking to buy this one really, really low, around 2,500. There's just a lot of choppiness. We already took some profit on Euro CAD buying it at 3,000. So we took a stab, took some profit at 32. If it goes a little bit lower, that's good. I want to see if this will drop down to 2,500 or lower. I'll start scooping up some buy trades. But meanwhile, if this drops, our CAD Swiss should pay us to the upside. So hopefully that's a nice little, inverse correlation we can trade. Euro Swiss, my favorite. Not really, but we're at some fresh lows, 95.88. Now, I want to check something here. Was this just a big push to the downside over the weekend? So we started the trading day. We went a little bit lower. I just need to see this silly thing break this trend line. That's it. I mean, once we get on the right-hand side of the trend line, it's a very different looking discussion. Left side versus right side. So I wait patiently. 95, 92.50, 9,000. I'm looking to scale in. I keep throwing out the warning signs. There may be a flash crash coming on some of these euro crosses or Swiss pairs, or even yen crosses or dollar pairs. We've had so many trends this year that any one of those could be a candidate for a potential flash crash. And again, flash crashes can be very dangerous for retail traders if you're over leveraged, but they can also be beautiful tops and bottoms forming in the market where you can trade this massive pendulum shift the other way. So you can see pretty cleanly we haven't broken the trend line. That's what confirmation I need to get more bullish on the Euro Swiss. Euro Pound, I can say out of that one, nothing to do there. Euro Yen, pretty choppy. The bulls, if they're going to take this back up, we have highs. They need to break that structure there to take it back up. The bears, if this is a head and shoulders pattern, that would be a head and shoulders. We break potentially all the way back down to where we started. So again, a lot of kind of coin flip type setups if you're looking at position trading these JPY pairs. Your New Zealand, I'm going to stay out of this one in case it comes lower. If it comes down towards 55, let's just call it 5,600, pretty interested in buying it. In the middle, I'm not going to trade it. It's been really choppy. So comes down low enough, we'll buy it. Comes up high enough, we'll sell it. In the middle, we'll stay out. Euro dollar, we're at parity again. This isn't a huge surprise. We also have a pretty solid bar count. We've had 5 or 6 straight days to the downside. You can see that correlation with the dollar index. Dollar index goes up, DXY goes up, euro dollar goes down. Okay, so the reality is this. Do we come back in and make some fresh lows? If we do, how much lower? 9,900, 9,800, 9,750? I don't know. But I do know that if we make a new low and we create some divergence in oversold conditions, at some point I'm looking for this to still make a correction back into that 200 EMA. And that bar count, let's see, it has to be correlating somewhat closely to that US dollar. So it looks like it's close to the DXY. There's the last time we hit, where it should be around 240 bars, 250 bars. Yep, 250 bars on the euro dollar. And you can see that it hasn't broken the 50, right? The 50 EMA holding resistance, holding resistance, holding resistance. So let's say we make a fresh low, we put in a little morning star, something bullish, and we run back up above the 50 EMA. Well, we get above the 50, we should make a run and finish up to the 200. That brings us to an outer trend line as well. Again, I know I might sound like I'm crazy talking about dollar weakness, but I'm technically trading it. Okay. All right. Pound pairs, pound Aussie. Yep. Pound Aussie. We'll let this one just do its thing. This is a pretty strong support level here, but if it gives way, this is what I want to be careful of with traders in the flex room is if this gives way, there's room for the pound Aussie to drop to 1.60. There's still past support in here. We had this massive inefficiency from a big drop earlier this year. So the reason I'm a little hesitant to just jump in and sell this is because we've traded this range pretty successfully. A couple of times we had some buy trades around 7,200 and we got paid on that pretty nicely. We took profit last week at 70. It was like 72 entry, took profit around 73.20 or something like that. If it's going to keep dropping, obviously past support becomes resistance. Stay with that flow all the way down here to these, post-Brexit kind of historical lows around 2016-17 levels. 1.6, that'd be a big opportunity to buy it. Take it back to 1.7. Now granted, that gives you an opportunity to be short and then find some major support, build major support, take it up for a nice little pendulum shift back up. So support resistance, I'm telling you, you can trade it. It's pretty amazing stuff. Pound Canadian, we're trading at 53.71. Just going to hang tight in this one. More and more divergence, lots and lots of support between 52.50 and 5,000. So I'll hang tight. Pound Swiss, we're at some fresh lows, oversold. I wish this one had a better bar count, but I'm just going to sit patiently and just kind of hang out. I'm long on Pound Swiss and Euro Swiss, but obviously more confirmation is needed. Pound Yen, I'll say on Pound Yen that if we come up to these highs, I'm looking to sell it. Very choppy, very messy. Not doing anything with it right now. If it drops down to this level, interested in buying it. Okay, comes up to this level, interested in selling it. Pretty straightforward. In the middle, staying out of it. Pound New Zealand, this one's pretty messy. I would just stay out of this one. Pound US dollar, we need to recapture 1.20. We're at some lows. This one looks pretty similar to the euro dollar. Doesn't have as good of a bar count, but if you look left, there's Brexit lows and flash crash lows in 2020 down to 1.14, 1.1450. So could we head down that low? Maybe. Could we have equal lows here and have some consolidation still? Maybe. Could we have a transition and turning point in the dollar for this to correct? Maybe. There's lots of pockets. There's overextended conditions on the dollar index. The pound dollar is weighted in that as well. Okay. So position-wise, small trade sizes, patience, looking for dollar technicals. Yep. All right. New Zealand CAD. This one I'm holding long. Actually, I should say I'm reloading. We took some nice trades on this New Zealand CAD. Took some profit right in here. I'm in, it looks like 2 positions now. Pullback, pullback, pullback. I'm filled on 2 positions, and I'd like to see if the New Zealand CAD can get back up to this level. Previous high, past support right around 83.30. I'm going to look to take some profit in there if we get a nice little swing. New Zealand Swiss. Did we get filled at the reload? We did. 59.30 reload trade was filled. So we took some profit for about 100 pips. Got back in at 59.30. Let's take profit again at 60, 60 plus. Let's grab another 100 pips on that New Zealand Swiss if you're long with me. 5930. If it's up to 60.25, 60.30, 60.50, look to take some profit on that one. New Zealand Yen. If we hit this green box, I'm looking to sell it. So this either has one more push to the upside, and then we look for a sell trade, target the low, target the low. I like that setup a lot. Or if it is going to consolidate and then start to break, maybe looking at a bit of a flag or something to the downside. I would prefer to sell it at this green area around 87, though. If it comes up high enough, I'd like to sell it there. New Zealand dollar. Aussie dollar, New Zealand dollar, pretty similar. Very aggressive sell-off. We'll see what the dollar does for the next couple of weeks. Dollar CAD. Big move to the upside. Still really slippery. I wanted to buy it down here. Those trades never filled. The next level will be up here. I'm going to try to sell it between 32 and 3,300. In the middle, I have not been in the trenches on the dollar CAD. It's been a bit of a mess. If you got into this stuff, that's fine. But I'm looking to sell it high. I'm looking to buy it low, and I'm just letting it play out with a bunch of noise right there because it's switched direction like 4 times in a couple of weeks. Dollar Swiss, pretty steady rally for the last 5-6 days. Currently long on dollar Swiss, a bit of a hedge against that euro dollar. If the dollar Swiss continues to go up, fantastic. That'll pay out nicely. Meanwhile, I will manage the trade on the euro dollar. But if the dollar Swiss comes back into 99 or 1.00, that's my profit target. And then dollar yen, getting through all the majors here, 137.06. I was looking for this correction. We have a high to low. If this is a three-wave move right there. So low, high, higher, low, higher, high, right? 1, 2, 3 wave. If this high holds and this low holds, I would look to see if that corrects based on the bar count. Now, I've told traders this in case it gets really messy. Maybe this wants to keep creeping up here. Maybe this wants to tag these highs at 140 and then start topping back down to go back to that 200 EMA. I don't know. But I'm actively trading small, but my destination is going to be sticking with these daily time frame 200 EMA bar counts because there's a lot of them. Okay, and a lot of them are dollar related. So usually when you have a nice technical alignment with a basket like that, like several dollar crosses, the dollar index, for example, they look pretty good and they technically work out pretty well. Okay, so Wall Street's about to open. 417.21 pre-market. We're going to be down about 1% plus for the year so far to date. Nasdaq's down 18.79%. S&P is down 11.28. Dow's down 7.4. The 10-year note sitting around 3%. Bitcoin had a really rough weekend, actually. Friday last week, Bitcoin was pretty telling. That was a really aggressive slide on Friday. So we're trading at 21,175. Is this vulnerable to the downside towards 18,000? Sure, but this might also hold right here and bounce right off that channel support. Okay, that 418 SPY alert was for my bear call spread last week that I ended up taking a small loss on. No big deal. So anyway, Bitcoin, and I've said this, this movement right here did not convince me the bulls were in control. This looked very corrective, right? So with that aggressive sell-off on Friday, this may still push into these lows. Hopefully we don't really go too much lower because I could see some consolidation kind of building a base on Bitcoin, but it's really anybody's guess. And I'm going to keep repeating this. This correlation is going to be a really important one to watch. Dollar index, S&P 500, and Bitcoin. Okay? If the dollar is stronger, equities and Bitcoin will likely be weaker. The dollar gets weaker, equities and Bitcoin should get stronger. Now, it's anyone's guess what the market's going to do and where the market's going to finish this year. Some experts are saying we'll finish at new highs. And then you've got your doomsdayers that are saying we're going to be in the worst, recession collapse that we've ever seen since 2008 or worse. I'm not saying you have to pick a side because I'm certainly not. I'm looking to trade the here and now. I'm trying to trade in the present and just make sure that I'm positioned for whatever happens. If the dollar gets stronger, how do I position for that? If the equities market falls, if Bitcoin falls, if they rally, how am I positioned for that? It's all about risk management. I told traders this last week. I have been hedged more this year than probably ever before in, really active trading probably the last 15 years. So that's crazy. Like that's a very different approach to it feels very different in the market this year when you are hedged because you know that you're constantly managing good with bad. If it's good, great. Take some profit. Now the test is, do you hang on to all your bad trades or do you take some profit and wash those bad trades? And I've been doing a little bit of both. Taking some profit, washing some bad trades, getting rid of some of those losers that I have no business being in or that I don't like anymore. My options or my stocks and options portfolio, same thing. I've cleaned up a lot of trades by just dumping them. I considered it dead capital. It's not doing me any good tying up 500 shares or 1,000 shares of something that's, been beat up 90+%. There's opportunity in it, but if my cost basis is not close to those lows, any type of recovery is not going to help me. Case in point would be ARK. Okay, I have a break even on ARK of 75.51. Now, I could have gotten super aggressive and I could have doubled my position size way down here at $40 and maybe been close to break even right there. But the reality is, I think over time, sure, give ARK some time, let technology and innovation, win the day, and maybe it's 3 years away, maybe it's 5 years away. But longer term, sure, I'll hang on to ARK. I can still trade some options, as I see fit to lower my cost basis a little bit. So look, it's just an important year to be a trader. That's all. Be nimble, be agile, make sure you can maneuver, good risk management. It's really going to separate, those that generate profits from those that don't. Okay. All right, 9:33. Any requests? Otherwise, I'll wrap things up. Got a couple things to knock out before class at 10 o'clock. This week, I'm trying to think. Trading, business as usual, trading room wise. Monday through Friday, equities on demand. Tuesday, Wednesday, Thursday, flex. I know I'll be in some webinars this week for Momentum Breakout Max. I did some updates on the robots, so you'll see me in some webinars this week for market traders, and that should about do it. XLM, is that Ripple? No, that's XRP. What's XLM? Stellar Lumen? Okay. BGFV got called away, I think, right? BGFV. Sorry, I'm just going to check this really quickly. I believe this one got called away last week for a small profit. Let me see where it closed last week. So the close last week, I think it was at 1260 or 1270. Close 1269. So BGFV got called away last week as well for profit. That was like a 55 to 70 cent trade for most traders. That was a good little win. XLM, yeah, I'll take a look at XLM. Crypto, right? Is this Stellar Lumen? Yeah, Stellar Lumen, okay. 10 cents. Pretty decent bar count, I mean, from the technical side, but look, I'm not really looking at a ton of altcoins until we see a broader rally with crypto in general. Look at the Coinbase market cap, look at Ethereum, look at Bitcoin. You have to see bullish in those for a lot of these other ones to just unanimously run. Now, there's tons of support, back down towards 5 cents, 10 cents. I think I still have some Lumen in my little, portfolio. I did some Lumen, I did some Ripple, but I haven't been adding to it. I would say this: if it comes down to these lows, we're sitting here at 5 cents. Like, sure, I could buy some more Lumen, throw $100 at it and see what that gets me. If it jumps up here, maybe it turns into $500 or $600. Maybe it turns into, that's 1,000% increase. So take $100, turn it into $1,000. Not a bad trade. BBBY, yeah, those meme stocks, man. I'm not touching those things. Look at that. Bed Bath & Beyond is just fun to look at. If you didn't get this run, I would not even participate. I think the pump and dump is going into a hibernation. I think that was the trade. That was the reality. If you didn't get a chance to get out for profit on this big jump up, you're screwed. Somebody's going to be left holding the bag right here, right? Traders that are late, traders that are trying to follow and chase, guess what? They end up losing. So if you're in, great. If you're not able to get out and capture some of those runs, you're sitting here holding the bag and you're the dumb one. So Bed Bath & Beyond had a big squeeze last week. There were some other ones. I think BGFE was actually included in that. You can get a list right here, short interest stocks. This is really, if you're looking at where those Wall Street bettors are playing or where the big social media threads are running, it's really these lists. It's these stocks that all have these high interest short interest floats, and the volume ends up exceeding. Like the amount of short interest exceeds what is available to trade, and that's usually where those runs actually happen. It's been around for a long time. So don't think that it's just now brand new. It's like, look, Wall Street bet traders or whoever's doing this. The good thing is, like, it's led by retail traders, which is kind of encouraging. But if they're looking at what list of stocks, I mean, Bed Bath & Beyond was one of the highest shorted stocks, so it got squeezed, right? MicroStrategy had a big run. Upstart had a big run. Big Five Sporting Goods had a big run. Beyond Meat hasn't really moved much. But again, these aren't, by the way, fundamentally, these aren't great companies. That's the crappy part. That's what makes it kind of difficult to trade. Is you got to believe, like, well, come on, squeezers, let's get this market to run. But that doesn't always work. You could just tie money up into companies that aren't going to do well. So it's like with everything else, there's risk in trading. You know the deal, right? But it's exciting. It caused some headlines, and that's probably what gets everyone all jazzed up about it. Like, oh boy, Bed Bath & Beyond, what do we do? Nothing. Go trade something else. Unless you're in those forums and in those Reddit threads and you're in the Wall Street bet army, it's just a pump and dump. You're either on the right side of that move, or when it gets dumped, you're getting, like I said, you're left holding the bag. So there's better stuff to trade. There's 7,000 stocks out there to trade. Okay. So you don't have to settle for something that's like everyone in the world wants to short it to zero. And you're like, no, I'm going to get this crazy squeeze up for 500%. I mean, for every one of these, there's 100 that will never amount to anything. So it's hard to pick that. It really is kind of like the needle in the haystack sometimes. But anyway, all right, traders, I'll let you go. Thanks for being with me today. I'll see you back here on Friday at same time, 9 o'clock for youtube.com/Chris Pulver. Let's wrap up the week. Traders in the trading rooms this week, let's have a great week. Equities on demand, I'll see you at the top of the hour, Monday through Friday, 10 o'clock. Flex, Tuesday, Wednesday, Thursday. And let's do what we can. Let's kill it this week. Like I said, final week and a half of trading. This is our last full week of trading for August. Wrapping things up on the 31st. Jackson Hole this week, Thursday and Friday into the weekend. And we'll see what this transition looks like. Okay? All right, Peter's asking for copper. All right, dude. Copper, I'll just go to copper futures. Copper futures off the lows. Potentially still vulnerable. Let me go. Actually, it should be much cheaper. HG. Yeah, there we go. So we do have some decent structure on copper. Like I said, it's potentially vulnerable to the downside, but this is going to be an equities correlation as well. Equities goes up for risk appetite. Copper probably rallies. Equities goes down for risk aversion. Copper drops back down to lower structures. Okay, I mean, this run from $2 to $5 is pretty miraculous. We pulled back into past resistance, becoming support. From the technical side of this becomes a cup and handle. I'd like to see the market make a new high. Same thing in equities. We've had this nice July rally. We're pausing. I know we're pulling back today. But if we break those highs in the S&P 500, that path of least resistance is going back to those 2022 highs. Okay? And copper could follow. So it's a bit of a coin flip right now. We break the highs, I'd follow it. We start to, look like we're on shaky ground in equities, and copper's probably dropping lower. And I would just, again, I'll buy copper lower. I buy it at $2.50. I'd buy it at $2. I'd hold copper. Right? We've seen some value plays on copper over time. So, all right, everybody. Thanks for watching today. Tune in live. If you do me a favor before you go, I know people have been bouncing out. Hit that thumbs up button for me really quickly and help the YouTube algorithm, help the channel. That goes a long ways. And see you on Friday. Okay. Happy trading, lots of profits. See you soon. Bye.